Brian Sullivan, as you know, has been outside the White House for the better part of the day leading up to this meeting. Is this, Brian, exactly what that is, a sales pitch from the president to these oil and energy executives to invest heavily in Venezuela and help rebuild their infrastructure?
Yes, and what he said at the very top of those comments, Scott, was key for ExxonMobil and, more importantly, for ConocoPhillips. And I'll tell you why very quickly. ExxonMobil and Conoco, they were in Venezuela in 2007. There was an argument, a fight, a bad negotiation, whatever you want to call it. They were basically expelled out of the country / chose to leave by Chavez. They're owed billions. ConocoPhillips won about $9 billion in a legal judgment against Venezuela, but they have not collected because the country, of course, is poor. In fact, it owes $60 billion to China. What President Trump said at the very top, he said, we'll pay these American oil companies back with Venezuelan oil money, but not from the money from the oil that we just were given by Venezuela. We can only get that money back, or they can, from new oil production. I think that was a pretty clear message to Conoco and ExxonMobil that, hey, we'll help you recover some of the money that the nation of Venezuela owes you, but first, you're going to have to go back into Venezuela and recoup production. So those are two stocks to look at. I think, Scott, I would look at a Valero. I know the stock moved big earlier in the week, so today it's not moving much. They're a refiner that could handle a lot of the heavier sour crude Venezuela has. Their CEO, by the way, is in the building, or the White House behind us here. And then the SLB, formerly known as Schlumberger, they're Chevron's partner on the ground. The services companies, them and HAL, a Baker Hughes, BKR, they're the ones that would have to go in first and a kind of like a surgeon perform that triage on the Venezuelan oil industry, which not only is dilapidated but barely getting 900,000 barrels a day out, but is also an environmental risk because things are so shoddy. So look at an HAL, SLB, BKR on the services side, XOM, CVX, COP on the oil majors side, and then a VLO, and to a lesser extent a PSX on the refining side. I hope I got all my tickers correct.
Yeah, you probably did. We'll cycle through those, but let me just ask you, the hesitation that I had mentioned, or at least the skepticism maybe is a better word, is it more related to what the return on investment would be, and what degree does safety and security play into it, because the president highlighted that rather high up in his remarks?
Venezuelan oil is extremely cheap, what they call at the wellhead, Scott. In other words, to actually just take oil out of the ground, because Venezuela is an impoverished nation, would be inexpensive. But to your point, the ROIC, return on invested capital, that's going to have a lot of security layer gone in there. And that's, I think, the natural tension in that room. Everybody's going to smile and they're going to talk about oil and gas prices. But at 58, 59 bucks a barrel for WTI, is that margin opportunity worth the risk and investment? Let me just quickly put numbers into perspective. ConocoPhillips building a giant new facility in Alaska called Willows, 180,000 barrels a day, so not a huge production out of it. That facility, Scott, is $9 billion. So if you're talking about an Alaska facility for $9 billion at 180,000 barrels a day, to get 500,000 or 700,000 more barrels a day out of Venezuela is going to cost billions of dollars, not just to get going, but to maintain as well. So I think that's going to be the natural tension, that pricing perspective and that margin opportunity in the country, to your point, Scott.